days. Let's trade it now with Charles Moon, stock strategist, Prosper Trading Academy. How are you approaching your example trade, Charles, for Dell?
Yeah, with earnings coming up, I'm certainly looking for some sort of positive catalyst. Usually when stocks have this type of retracement, this short period of time off of their highs, it changes kind of the valuation aspect leading into earnings. So I feel that it's still, offering up some short-term value. Anything that's going to be related as positive from earnings could lead to a nice little boost in the stock. Now, in terms of earnings performance, it hasn't been great over the last 4 quarters, but overall, I do like the value in this opportunity. I'm looking at the November 28th, 125, 133 call vertical spread for around $3, maybe a little bit up above $3 or lower if possible. But ultimately, buying that 125 and shorting the 133 allows us to kind of capture that projected implied move. We could see it really race up to 140 off of earnings, maybe even as high as 143 in the near term. And more importantly, the overall risk values of the spread isn't that expensive. I would actually be risking the price of the spread right around that $3. But I believe that if it could make that jump to 140, 145, it'll be well worth it. And again, with the suppression in price, especially this 25% retracement in just the last few weeks, it offers up short-term value. So, when traders look at earnings reports and valuations are always a concern, when we see this deep type of pullback, it kind of changes the sentiment in terms of approach onto these earnings calls, and obviously could have a strong ramification one way or the other based on how the company reports.
Yeah, it's interesting because even with the Morgan Stanley downgrade, I'm actually just seeing JP Morgan has raised the price target here on Dell and talking about how they do expect near-term revenue and earnings upsides from AI leverage companies to reassure investors. So they're looking at a price target of $170, and we're at 124 and change right now. So it's a bit mixed as far as what the analysts think. Hey, Charles, just want to get your overall thoughts on the markets today. We're looking pretty range-bound ahead as what is going to be a pretty busy week. A lot of sort of event risk on the horizon and plenty of catalysts to work with. What are you watching?
NVIDIA. I think a lot of this is going to be tied to NVIDIA's earnings report because, it's not so much that we've heard the pop in the markets, but we have seen some really big unwinding of these AI growth names, and the AI play is really getting pummeled. These Mag 7 names, especially those with, CapEx expenditures towards AI, are getting hit really hard. Meta's barely been able to lift. Microsoft's held up pretty well, and Google's been a strong performer today as well. But, I think a lot of this is highly dependent on NVIDIA, seeing how the semis have performed. We've seen a lot of the growth AI names getting hit really hard. So, this has been kind of the Pied Piper for the markets since we rallied off the lows. I think that, a lot of the market direction and sentiment leading into the December FOMC meeting is going to be really just on the heels of what NVIDIA does in terms of performance on their earnings report.
Okay, I'm just imagining Jensen Huang with his leather jacket now playing some sort of flute or something like the Pied Piper. But thank you so much for putting that in my head, Charles. All right, always a pleasure talking to you. Charles Moon there, stock strategist, Prosper Trading Academy.